is the countdown to the jobs report. It is a pretty green day in equity land today. Yesterday I mentioned getting out of precious metals, and for once I was hoping to not see green on the screen with gold and palladium, and happily that turned out to be a good call. Gold is down, palladium is really down, and I'm glad to be shed of them for now. I would very much like to get back in at lower prices. Could be a few days, but that was a good call. So bailed on that stuff. And I also lightened up on shorts. So I went from something like literally over 200% committed down to like 70% now. Just kind of bracing myself for tomorrow's jobs report. It's a good day, relatively speaking. As I said, I took profits yesterday on precious metals, and of my shorts, most of them are actually down today. The one stinker is the diamond puts. It's not like the diamonds are exploding. They're up 0.82%. But, they're October puts. They've only got about 6 weeks left, so they're going to be pretty volatile. So that's really the only kind of crummy part of today's action. But as I say, there's plenty of time left. And tomorrow, of course, could be pivotal. Tomorrow could be, yet another nail in the coffin of any surviving bears, or finally, ray of hope for the bears. So should be interesting to see. I've got my charts ready to go. So let's jump in and look at some odds and ends. Here's the spider, which, like with most equities, is green. We are getting close to the lifetime high. We'll just put a marker right there like so. It would not take much at all tomorrow to push this to yet another record high. Past 3 days, solid green bars. And the diamonds, as I said, the only thing I'm sort of wincing at today some, and these two could fail as far as the position goes. We're getting pretty close to the lifetime high on this. It looks like almost certainly a new closing high on the diamonds. So if this just keeps sailing tomorrow, bye-bye diamond puts, but we'll see if they reverse or not. So that's very important, because if it does push past that level in the morning, then the bulls could be off to the races on this, because this is a very well formed inverted head and shoulders setup. I've been making mention of Bitcoin lately as sort of a asset risk proxy, and it is slumping today somewhat. The lifetime peak was back on the 14th, $1/8 million about. And a few days ago, it got as low as about 107,000, so about $18,000 drop. And we recovered a little of that, but it's basically just kind of hanging out here. This is a pretty bad break, because this trend line was the key medium term. And it clung like crazy to that for a couple of weeks. And then finally here on the 14th, ironically, the lifetime high day, it gave up the ghost. It slumped and then down, down, down. We went from there. One other bright spot for me today was China. I mentioned yesterday I was going to re-enter China based on the simple fact that this broken trend line has provided resistance time and again. Sometimes quite precisely, like here and here, and other times just in the neighborhood, like here and several times here. So shorted a bunch of FXI yesterday, and the government of China, in some form or fashion, said, hey, public, cool it. Let's settle down on this equity rally. And that was just what the doctor ordered. So FXI is down 1.57%, and I've tightened up my stop on that to be anchored to yesterday's low. So that was a good trade. Over in metals land, like I said, I was hoping not to look like a weak-handed buffoon today on metals, but luckily I've managed to, for once, not. And I'm staying away from them for the foreseeable future. As I say, especially with gold, I'd love to get back in PALL is sort of a tough read because it's such a thinly traded instrument. Got out a good time yesterday, I'll say that right there. It could easily fall, I suppose, to this low here, maybe even lower. I'm going to use gold as my guide in general. I mentioned yesterday that one of the reasons I was cooling to precious metals for the moment was because we achieved our silver target on PSLV. That line right there, set that up a few months ago. We got just above it a little bit. We meet the target and a few pennies for good measure, and we're slipping away slightly from that. Obviously, there could be plenty more selling to go. Gold itself, GLD, the front month is down almost $40. Here was the lifetime high yesterday. I would get very interested in this if we push down to this gap. That would be a pretty appealing point to consider buying. Who knows? I mean, if for some crazy reason we might get down there tomorrow. I don't know if something zany happens following the jobs report, but that's the level that I would be watching. Miners are obviously also off. They've had an incredible run. Lifetime high just yesterday, and we are turning south from that, and we could very easily slip back down to, say, this dash blue line like so. One of the individual miners that I've mentioned on occasion has been DRD, which has had a really good run, but this too, I think we're done for now, and it could easily fall quite a lot. For example, we could set this gap here as a prospective target for that. That's a ways away. For myself, and I mentioned this yesterday also, I believe, besides going flat with precious metals, the one and only thing I did that was bearish against metals was buying puts on XME. And they are January $85 puts. So a long time to go. I probably won't hold them nearly that long, but I did not want October's. And so those are doing okay. We've gotten a little soft on that. We've down about 1/3%. And it had a tremendous run higher. My sense is that it's pooped. And I would look for this vicinity here to take partial profits should we get that low. One other item that we haven't looked at in a while is the material select sector, XLB. And this one's still kind of interesting because we've got an analog here, in a way, this and this. The reason I'm not really hyped up on this is because what followed that was just a big fat mess, kind of range bound, bouncing all over the place, and we seem to be repeating ourselves there. But I would say it seems that this resistance level seems pretty tough, pretty strong for those who wanted to go bearish against that critter. Now, IPOs, we've been talking about those a bit lately, and in terms of how poorly they've been doing. FIG made that point. Again, I've been showing FIG from time to time. It only came public some weeks ago, and they came out with, I guess, what would be their first earnings as a public company last night. And as you can see, not warmly received. Another lifetime low. And at this point, and it's strange, I see this a lot these days with IPOs. You'll have a good first day, sometimes a great second day, sometimes extraordinary, and then that's it. So on this one, we've gone from around 143 down to about 55. So about a 2/3 chop to their price level at the peak there. Another earnings item was C3.ai Inc., catchy name, which is a very cool ticker symbol of AI, which if things continue to go this way, that might be an asset that they'd like to sell to OpenAI or something. But in any case, 5.34% drop there on the heels of their earnings. And another one, which I've mentioned here on occasion, a lot more heavily traded as a short idea, Salesforce, CRM. And this one has a beautiful new price gap. So if you're not in it, you might consider keeping an eye on that, because the closer it gets to the gap, the more alluring I think it'll be as a short setup, because yeah, today it dropped, but there's a big pattern there. It's not like, well, that's done. That's as far as it'll possibly go. No, I think it's got tons to go on the downside. So that gap would be a nice way to exploit that, I think. The CEO was also talking about, I think, getting rid of 25% of their headcount, something like that, just because of AI is cheaper than people. Not much time left. Just real quick, even on a day like this, sharing some nice short setups with you. Accenture, ACN. Don't even know if I've mentioned this before, but I really like that reversal pattern there. Advanced Micro Devices down about 0.5% more. That's starting to break down nicely. CrowdStrike, CRWD. This is a cool one. Again, with a gap setup. That is to say, using the gap as resistance. Cracker Barrel, Uncle Herschel's zone. The culture wars are alive and well with this. The short's doing really well for me, and I'm going to just keep hanging on because long term, it's a beauty. And now that this logo nonsense is out of the way, it's succumbing to the business realities there. And Roblox, look at this. Look at this. Here's the gap. The gap itself, 135.65. Today's high, a nickel short of that. That'll do. Beautiful gap seal on that one. So I really like the look of Roblox. And a new one for you, DHI. This has sealed the gap as of today. It took months, but it's finally there. We're just about out of time. Just super quick, a few ETFs. TLT is up today. Obviously, this will be influenced by tomorrow's jobs report. I have no strong feelings about direction on this one. The small caps, IWM. Key item here is the recent high. With respect to, if it goes above it, that'll just be more wind in the bullish sales. The cubes. In this instance, we've got a lifetime high here, a lower high here. Let's see if that lower high holds. And finally, a little bit smaller range or specificity, but this is the semiconductor ETF. Very range bound here. And if we do slump tomorrow, a break of this level would be very positive for the bears. So keep an eye on that as well.
If you're not subscribed, subscribe right here. And if you want to meet me and the team in person at our next live event, hit the link at the top of the description.